Roundtable with IPRG, and today we're sitting here. We have another guest, James Grasso from Cohabs, and James is the head of real estate and finance at Cohabs. So welcome.
Yep. Thanks for having me, guys.
Yeah.
I'm super excited.
Yeah, pleasure. Happy to have you here. We've been following Cohabs. You guys have been in the news a little bit recently, and over the years, we've sold. How many properties have we sold them? One? Two?
Two. We're under contract on one, closed on the other.
All right, so we're selling you guys some properties.
Yep.
The properties we've sold you have been smallish, vacant brick buildings in Brooklyn, right?
I think they're oversized. I mean, they're small in unit count because they're most of them are free market, so they're under 6 apartments, but they're large buildings in terms of square footage.
Yep.
Like the most recent one was 7,500 square feet or more, 4 family. So very large.
7,500 square foot, 4 family.
Big floor plans.
Yeah.
And that was
A lot of
vacant.
windows. Yeah.
Vacant.
That's what we like. Yeah.
Yeah.
And what neighborhood is that?
It was in Bed-Stuy.
And the other one we have under contract is
Bed-Stuy.
All right, so Bed-Stuy, I know you guys have stuff in Crown Heights. Correct me if I'm wrong, but you have stuff in Prospect Heights, Greenpoint.
Yep.
So basically,
And Harlem.
Harlem. Okay.
Yep.
So a few different neighborhoods in Brooklyn and throughout New York City. Some neighborhoods might consider to be better. Some people might consider some of these neighborhoods to be a little bit worse. But anyway, so all right. So Cohabs. So Cohabs is a co-living company.
Yep.
All right. So let's just talk about this a little bit because there's been some co-living companies that have come into the market over the years. I think Cohabs is a little bit different. But what is this whole co-living thing all about?
Yeah, sure. So, it's been around in New York for obviously hundreds of years, right? It's nothing new. I think what you're referring to is sort of like institutionalized, sort of branded startup style co-living. But co-living, it's been around in the U.S. since about 2013, 2014. It's been around in Europe for much longer. But what it is at its core is just sort of putting roommates together into a unit, into a house. It's evolved today where there's different styles of co-living. There are different structures as well. You can own the building, you can master lease the building, you can do a management, you can do a hybrid of the two, of the three. Mm-hmm. So it's certainly evolved over the years to the point where there's various ways to kind of spin the concept. In its very most simplistic term, it's basically just a dorm for adults in their 20s. New York is full of sort of transient, young, single people who are here for 2 to 3 years, and they need a place to live. They may move to the city and they don't have a lot of friends. Maybe they're in from the West Coast, Europe. They're sort of trying to find a community in New York. It can be tough. It can be a little daunting to find sort of roommates online, especially if you're sort of just coming to the city to New York. Mm-hmm. A 1-bedroom in New York is probably $4,000 now. It's not really accessible for everyone. So it's basically just a way to provide housing for people who sort of want to come to the city. The average renter in New York is 28 years old. Yeah. So it's not sort of this dorm style, teenagers, like 20-year-olds who are in our spaces. It's an older crowd who just want a sense of community. They want flexibility on the lease term. The minimum lease duration is 6 to 7 months. Most people are signing a lease for 8 to 9 months, and most people are staying for over a year. So it doesn't really have that sort of hospitality quality.
Okay.
It's definitely much more like apartment-like in that sense.
Yeah, I mean it's honestly an amazing thing that you guys are doing. If the average rent in New York for 1 bed is $4,000, I mean that's a huge barrier to entry for people from outside of New York. I mean you said you moved here 5 years ago.
Yep.
Where did you move from, if you don't mind me asking?
Yeah, so I was born in New York, but I lived in Chicago for 4 or 5 years. Mm-hmm. And when I moved back to New York, I moved in December or January, and trying to sort of match up a lease cycle with my friends was really, really hard. So I met a broker who was leasing a three-bed apartment, and he basically introduced me to 2 roommates on the fly.
Oh, wow.
And that's kind of how I got the spot. So I was lucky. It was easy, but for most people, it's a tricky situation trying to find housing in New York.
And so you essentially rented a room with these people you didn't know, and they became your roommates.
Exactly. Yeah. And that's essentially what co-living is.
Which is a very common story. I mean, that goes on all throughout these neighborhoods as people move to New York. And you're right, they match up with these brokers. The brokers will try to get them into an apartment. Many of these apartments are, 2 to 5 bedrooms, whatever it is. And then people end up, I guess people are doing like this kind of co-living just randomly. So you guys you're saying it's institutionalized, it's branded.
Well, landlords, just to cut you off real quick, landlords are doing it all over the place. We see it in the big units in Bushwick, and maybe not so much Prime Williamsburg anymore, but definitely Bed-Stuy and Bushwick for sure. But they're not professional about it. A lot of them have horror stories because tenants get in fights, they move out. But
one person doesn't pay their portion.
Person doesn't, but they're not used to managing this. So enter someone that does it as a profession, and it's gonna be managed a lot better. So I think there's definitely a need for it. It definitely makes sense. But these landlords that are used to the business as they've been running it, I don't think they can handle the co-living. And if you do it the right way, it works really well.
Well, the issue that we saw over the last couple of years was COVID.
Yeah.
I mean, there was the massive trend where for the longest time people used to say you get $1,000 per room, like in Crown Heights or Bushwick, or $1,200 a room. And so there was an incentive for these owners to develop these 4-bed, 3-bath, or 4-bath,
even crazier,
or
5-bed, 6-bed.
Yeah.
I mean, I've seen 7-bed, 7-bath units in Bushwick.
Didn't we just sell one in Bushwick?
We did. We sold 2 of them.
Yeah.
We love that stuff. We'll make a 4-bed into a 9-bed if we can.
Yeah.
So you have such a higher incremental value by squeezing in 1 extra bed.
Got it.
And that's kind of part of the philosophy when we underwrite a deal. It's basically how many rooms can we get in this unit, and in this building.
Just going back to the SRO stuff. Sorry, not SRO. Just to the co-living stuff, and where you mentioned SRO. How is this regulated, or is it not? And does Airbnb type of stuff play into this as a form of competition, or is it just basically you're just trying to get new tenants to New York and get them housing?
Yeah, I mean, I think it is regulated in the sense that we need to operate like an apartment. We can't offer leases less than 90 days because that's illegal in New York.
Okay.
We're
Is
not
that considered a short stay?
Yeah,
Basically?
it's
So that's hospitality at that point.
Yeah.
Okay.
So it's got to be 90-day leases. You've got to create a unit that is sort of approved by the DOB, right?
Yep.
Every 6 to 7 beds has to have a legal living space and a kitchen. It still operates in a bit of a gray space. Like the DOB, HBD has never really said co-living is this or that, but you're just sort of operating under the existing legal framework that you have, and that's kind of just what we've been doing.
All right, amazing. That's really helpful overview.
Yeah.
I think on on how to look at it. And I mean, just thinking it's a very good thing. I mean, when I moved to New York, I'm not from here either.
Yeah.
And finding a roommate and figuring out the whole housing and leasing thing was, it was a whole process. And to have a branded, institutionalized place where you can go in and feel very good about what you're getting into.
Yep.
I mean, we definitely need to do whatever we can to encourage people to come to New York City.
Yep.
Instead of there being just so many barriers and it being so expensive. And
how many times, obviously we own a brokerage, and young brokers that are starting the business, a lot of times they can't afford to move to the city, and we've seen so many times they're living with their parents, or Long Island, or Jersey, and Connecticut, and they're coming in, and they're just doing that because they can't afford to live in the city. But if they could figure out a way like this with co-living, I think it makes it very simple.
Somewhat of a short-term lease.
Oh, yeah. I mean, there's a lot of people. I would have done this. I mean, when I started brokerage, I commuted for 6 months. It was unnecessary.
All right, so let's talk about this, all right? So we talked about other companies that have come into the market and tried to do this, whether it's owning or master leasing and management.
Yeah.
I want to talk a little bit more about that. I also want to talk about like why does someone decide to come and live at a Cohabs? Like, what are they getting in terms of amenities, and then we'll talk about what other companies have done.
So I think I had mentioned earlier, like there's definitely different styles of co-living in New York, right? There's sort of the style that is, this is just pure convenience. We're sort of more of like a community-oriented co-living firm. We do lots of programming. We like to sort of create floor plans that are larger, like more beds per unit to sort of encourage people to spend more time together. We like to buy houses in certain clusters in Bed-Stuy and Crown Heights. We can kind of have events that are in the area. This was sort of, these were features that sort of other co-living operators did, and then some kind of tune them out, some kind of tune them in. For us, it works because it drives their attention, it drives engagement, and we can get more rent as well. So,
got it. Very nice. And then, so someone rents from you. So they're like, what do you guys provide? Are you giving them a room, and then like
you've got a pre-furnished room. You have access to a kitchen, a living space. All of our buildings, or mostly all of them, have a yard.
Okay.
A rooftop. There's like a theater room in the basement. There's actually no TVs in the individual units. There's kind of one TV room in the cellar as kind of a way to encourage people to spend time together. And then a gym. So
Cool.
and all your utilities are inclusive in the rent. So water, gas, electric, your Wi-Fi.
Nice.
And you can get like a bedding pack too. So you can literally just come to the apartment and there'll be sheets and a pillow on your bed.
It's amazing.
Yeah.
Yeah.
That's great.
Yeah.
It's really cool.
Yeah. Really cool.
What about cleaning?
Cleaning is once a week. So that's obviously, that's a great question. I think that's one of the biggest points of contention.
Yeah.
And co-living, you've got a bunch of roommates that you don't know, like who's ultimately responsible for cleaning. And the answer is like, you are responsible for the basic stuff, but there's a cleaning service that comes in once a week and does a full clean of the house. So that helps as well.
Let's talk for a minute about the structures. Just you guys are buying buildings you own, right?
Yep.
You're buying vacant buildings. You're redeveloping them. I guess that's somewhat cash intensive. I think I saw that you guys are taking on some financing on this.
Yep.
Other people have come along and done master leases. I know that there's a couple years ago when companies were trying to master lease vacant buildings or renovated buildings.
For
or
sure.
They were even doing some renovations, I think, in some cases.
They were overseeing the renovations. Like they would approve the plans, they would show the owner what they wanted to have done, and the owner
they
would
would rent from
execute.
the owner.
And they would sign a master lease with the owner.
I don't know how any of that played out.
I don't really know either. And
I can tell you,
Let's hear it.
I worked for a company that was called Quarters.
Okay.
They went bankrupt 4 months after I joined.
Yeah.
And it was the first my first foray into the co-living world.
Okay.
I came from sort of more of a conventional background. I worked for an investment bank. I worked in PE, had an interest in the space. They did master leases, right? So the three structures, master lease, management agreement, and you own the building. They had a master lease, which is more profitable than a management agreement. There's just more upside. You're kind of taking the operating risk, but it's also very highly leveraged in that the second the tenants stop paying you the rent that you owe to the landlord, you're in trouble. And they owned a portfolio of 8-10 properties in the U.S. And when COVID hit, they weren't able to repay their lease obligations to the landlord, and they went bankrupt within about 3 months.
Yeah.
So that's sort of the disadvantage of that. I think that was sort of the original structure for co-living, because when you're coming to New York and you're trying to convince these big landlords who are sort of old-time landlords that you need to manage the building and you can increase rents, they want to put the risk on you with the management agreement. They're kind of in trouble if things don't go good. They're the ones that sort of collecting the cash and the rents and all that. So the master lease it's a bit riskier, it's a bit more profitable, and a lot of those operators have now switched to a management agreement where you just take like 5 to 6% of PGR.
Got it.
Yeah.
And what is PGR?
Potential
Gross rent.
gross revenue.
Okay.
Yeah, you can do
Got it.
it off of NOI, off of rent. Yeah, there's various ways to spin it.
All right. So you guys, I saw in the Real Deal, you guys recently raised $450 million,
Yep.
and you're going out and you're buying properties and redeveloping properties and making this co-living portfolio.
Yep.
Anything you could share in terms of that, going out and buying and just the capital that you recently raised?
Sure, yeah. So we raised money from Ivanhoe Cambridge, big pension fund based in Montreal. They obviously are a fan of the product, and they want to see if kind of what we can do can be scaled. So right now we've got about 12 to 1,400 beds that we own across 5 cities: Brussels, Paris, Madrid, U.S., in New York, and they want to get us to 4,000 to 5,000 beds. So it's just trying to sort of scale this idea of buying sort of more boutique properties in New York, kind of 4 to 5 families, tax class 2B. What we look for is, we look for vacant buildings, we look for corner buildings, anything that has lots of air and light, which is always tricky in New York, right? This is kind of the city of like the mid-block 20-foot property. So the money will go to sort of continue the expansion in New York and also potentially expand to a few other places in the U.S. as well.
Very nice. So the plan is just to buy. Are you buying buildings that are already like renovated, or
not typically?
Okay.
It's tricky because we have such a unique layout.
Yeah.
The way that we like our rooms to look, the way that we want our kitchens to do, that unless the building is close enough to that kind of structure, it's not going to make sense to sort of buy it and put the work in. Yeah.
So you guys are looking for vacant buildings that you could go in and redevelop. So you buy it, you're filing plans with Department of Buildings, you're completely gut renovating these properties. So there's a big construction aspect to getting these units online.
Yep. Huge construction. I mean, we're putting anywhere from $700,000 to $2 million into the deals that we buy.
Do you think that you're putting more money into these renovations than like people do on just a normal apartment building to get? I mean, you mentioned the cellar, the movie room, the gym.
Yeah, I think we probably are, just because of the density that we need of rooms per unit, right? Every time you add a room, it's more expensive.
Got it.
We are amenitizing properties with rooftops and gyms. And also we're spending the money to get like a bed and a closet and all the kitchen gear. So there's definitely a bit more on the hard cost side, and there's probably a bit more on sort of the FF&E side as well.
All right. And you guys are completely redeveloping these properties, so they're definitely built for co-living.
Yep.
And you guys are going to have this huge portfolio of these co-living properties. Is there any thoughts about like the second, like when you go to sell them, like are they going to be liquid in terms of like selling them in the future once?
Yeah, it's a great question.
And vacancy aspects of the stuff with the rooms.
It's a really, really good question. When we do these properties in New York, there's always the thought like we've got to have a water heater and boiler for every unit. We've got to have electric panel, for each unit. There has to be some scenario in which these can be kind of spun back to just a regular 3 to 4 family. But I think the truth is that you're always going to need sort of a co-living operator to manage.
Got it.
All these properties, and that there's just going to be sort of large portfolio sales and recaps.
You have to imagine once the proof of concept, similar to like a hotel, you're going to have people that want to own these, including probably multifamily owners as well.
Yeah.
Just because of the return.
Yeah, no, that's exactly right. And I mean, I guess to the question that you're asking, like we're not, buying a deal and then trying to sell it one off in like 2 or 3 years. you've seen a lot of those trades on the market, and you've seen a lot of those deals kind of come where you've got a co-living master lease or a management agreement in a co-living property. And it's tricky because the owner is going to have to manage this one property with this other co-living operator. And it's tricky, and there's a bit of an adversarial push and pull if you've got the OpCo and the PropCo sort of in two different houses. So I've always said that it's best to kind of have everything sort of under one umbrella.
And there's always a buyer for scale. I mean, there always is. I mean, everyone a lot of the deals that we're doing with these funds, I mean, they're looking to build a portfolio for a sale. And I always think there's going to be a buyer for that, as long as it's grouped together and there's cash flow.
So before you came in, I was just doing some research on co-living, and I saw a statistic that said co-living gets a 23% premium on rent per foot compared to like a comparable studio. Do you have an opinion on that?
Gets a 23% premium
on rent per foot compared to a comparable studio. Meaning co-living rents for much, much higher than a regular studio apartment.
Yeah, I mean, it wouldn't surprise me. I don't really spend as much time looking at the per square foot metrics as I do just kind of gross.
Okay.
So our rooms are typically anywhere from 85 to 120 square feet, and they'll rent from $1,800 to $2,000.
Mm-hmm.
So for us, it's just we need to be at a discount to a studio by like 30%.
That's how you guys do it.
Yeah, but if you take like the rooms per unit that we have, I could certainly believe that there is a per square foot premium of anywhere from 20 to 25% as well.
So for you, like bedrooms per unit is probably a metric you commonly use, or like rent per unit?
Yeah, it's more rent.
How many bedrooms you can get?
Rent per bed, right? And then, as I said before, like we've got to be able to get 6 to 7 beds per unit for the deal to make sense, because it's more operationally intensive. It's more expensive to run these properties. You've got cleaning services.
Yep.
You're paying for all the utilities. You've got a slightly higher cost of capital as well.
Mm-hmm.
So you've got to sort of have the density for the deal to make sense.
Yeah.
So basically, a 4-unit minimum size, call it 6 rooms, you need 24 bedrooms minimum, give or take.
Typically, yeah.
Okay.
So like in terms of underwriting these properties, so you're just looking at gross rent, where I was kind of thinking like a rent per foot. But are you guys like looking to like get to like a certain yield on cost, like given like your OpEx and higher cost of capital? Like, is that how you look at this, just based on what
that's
yield
exactly.
on
I
cost
mean, we're not concerned about the existing rent roll if there is any. It's typically solving to like a 7.25% to 7.5% return on cost.
That's good.
Yeah. When we can find those deals, that's good. I mean, I think there's a bit of cap rate expansion, co-living versus conventional.
Definitely.
I think it's compressed over the years a ton.
Okay.
I think you look at a lot of other alternative asset classes like student housing, cold storage, all this stuff. When these assets first come to the market, there's kind of a huge spread because no one really knows how to price them. And I think over time, they sort of gradually compress.
Mm-hmm.
I don't know if we'll ever be at the same cap rate as a conventional 3 to 4 family in New York. But I certainly think that we'll get a lot closer over the next 3 to 4 years.
Yeah.
I mean, yeah. What's interesting, a lot of like two of the big things, like the biggest headaches in New York City real estate for us and that we hear about is construction and management. I think those are two of the biggest things, and you guys are doing both of those at a very, very high level. So I'm assuming that you have all those pieces in place, like management and construction, because in New York those are very, very difficult. So I'm sure you've overcome a lot of obstacles in that arena.
Yeah. Huge learning curve, trying to do an Alt 1 in New York. It's like dealing with GCs, and it's really, really, really tricky, and we've definitely had some lessons. But I think part of the goal is to kind of standardize a lot of like the practices, a lot of the design elements, to be able to sort of do this at scale, which I think is certainly a challenge in New York.
For sure.
I'll just throw this out there. So before we started recording today, we were talking about this property we have listed in Greenpoint. It's a vacant brick building. It's currently a 2-family, but it could be redeveloped into a 7-family. So I just want to mention that James did say before the show that he would do alt ones. He would add additional floors. So I think that's very interesting.
Yep.
He mentioned that they haven't bought any land yet, but is that something that you guys would do?
We will in the future, but for now, it's just we prefer just to buy existing structures in New York. You benefit from kind of old code. You can make rooms a bit smaller. You can use light shafts and light corridors. With a new building, you kind of lose that. The advantages are that you really get to sort of create the footprint that you want, right? You're not kind of working around stairs and doors and existing windows, but we haven't done any just we own the dirt and we develop yet, but I think that could be in the future, the next few years.
All right, so the question that I really want to ask, if you guys are able to get such a premium for like the rent per foot or the gross income that a property can generate, I feel like you have a business plan that other people just don't have, and you can squeeze way more revenue out of these buildings than other people are able to. So I feel like you're in a position to basically buy every deal that you'd want to buy. Now, my question is, are there deals, say there's a big 4-family in Bed-Stuy that you guys love, you want to buy it. Are there scenarios where you guys get outbid and you lose out to other traditional investors?
Yes,
Or
and I love it when we do because I don't want to be the guy that you just described, which is just we overpay for everything because we can.
Well, I'm not saying you're overpaying. But you have, I mean,
or we can buy everything.
If you're yield to cost model, but you could build to a higher yield, I think, than many other investors could.
Yeah, I will say I think there's a smaller universe of properties that we can buy. Like we can't have anything that's rent stabilized.
For sure. Okay.
It's got to be a corner building, but no retail, because we just don't want the retail exposure. We want to have access to the basement and the cellar. If it's a mid-block property, it's got to be at least 25 feet. So there's certain things that sort of limit the portfolio of properties that we can actually buy. I mean, I get deals from you guys every day, and a lot of times it's just a quick no. It's retail, it's too skinny, there's a rent stabilized tenant in there.
Would you guys buy, this is kind of random, but maybe not, but would you buy like a mid-block, vacant, rent stabilized 6-family? Like a 25 by 65?
Is it vacant?
Vacant,
So
and
rent sub-rehab.
Stabilized, so it could be destabilized through sub-rehab.
Yeah.
But I know you said you want corners. This is mid-block.
We would, yeah.
Yeah, okay.
We would.
So you guys would do a sub-rehab?
Yeah, we haven't done a sub-rehab. We're looking at one now. I'm not quite sure where we stand on it. I've looked at a lot of deals. Obviously, the legislation is changing and evolving, and we just don't want to be stuck on the wrong side of the new rules.
And you mentioned no retail, but I'm guessing there's exceptions to that. I know you bought that deal in Greenpoint, which is a corner, which I walked a year ago, which was, I think it was 4 apartments and 4 stores, but it was an absolute beast of a building. I'm assuming you're converting that to fully resi?
Yeah, exactly. So if there is a retail component, it's got to be on like a quieter street, and it was something that we could make into residential.
So that building that we're talking about in Greenpoint, that will no longer have stores when you're done?
Yes, that's correct.
Okay.
All residential.
Understood. So like a deal to go back, we sold a deal recently in Greenpoint on a retail corridor.
Look, real quick, the banging,
Sorry.
People hear it.
Okay. So on a retail corridor, like that building was, I think, 6 apartments and a store. It was vacant for 50 years.
Yeah.
And it was completely in disarray. I mean, there was no kitchens, there was no bathrooms, no running water. Is that a deal you would do, even though it had retail, but it was on a retail corridor?
It depends. I mean, it's tough to put residential space on a retail corridor. So if it would be tough to sort of convert that lower space to like an apartment.
Gotcha.
Yeah.
And
Hang on, before
Yeah.
you jump in real quick, Steve, I just have one last question on buildings, and we could just shoot the shit about whatever.
Yeah.
But what about frame buildings? Would you guys buy frame?
Yeah, we would.
Okay,
We
cool.
would.
Have
Yeah.
you bought frame?
I don't think we bought a frame building to date.
But you don't care brick frame, so it's all good.
Yeah, I mean, with frame, obviously, like you can't expand it, or if you do, it's really hard. So we'd buy frame. Yeah.
Okay.
we know that you've bought in Bed-Stuy, Harlem, Crown Heights, Greenpoint. Are there any areas that you haven't bought in yet that you're really targeting that you want to get into that market?
Yeah, it's a great question, and it comes back to what's the highest you can charge per room, because co-living tenants are typically more frugal than regular tenants, and if you wanted to rent sort of a 4-bed in the East Village with your friends, you're gonna pay $2,300-$2,400 per room now, maybe slightly less for a slightly worse property, and a co-living rent has to be higher than that because you have to pay for the utilities, you've got to pay for the cleaning, all that stuff. So I don't think we found what the upper limit on rents are, but we haven't charged more than like $2,100 for a room, and that inherently precludes us from a lot of like the really hot areas in New York, Williamsburg, Soho, Lower East Side, East Village, and obviously everything on the West Side as well.
Yeah.
So we'd like to, but not yet.
Got it. And then I think for me coming into this, I know a lot of people might not be familiar with co-living. I think they always have these preconceptions. But like for me, one of the things I wanted to ask is, what's one of like the craziest tenant situations you had? Because I mean, you must deal with a bunch of personalities.
Yeah, we've dealt with lots of crazy personalities. Luckily, that's not my job, so I don't quite have the exposure to it. But listen, like when we started in New York, there were like 2 of us, and we did everything. I was underwriting the deals.
Yeah.
I was doing the maintenance. I fixed a couple blenders the first few weeks of work.
Wow, jack of all trades.
Yeah. So we haven't had any like truly crazy stories yet. I will say, as kind of part of the co-living infrastructure, you need to find a way to vet the people that are in your building, because it really only takes like one bad egg to screw up the house. So
And
Yeah.
I understand that. And like, I guess from a management perspective, what's been, I guess, one of the bigger hurdles of managing these, I guess, more tenants,
yeah.
co-living type properties?
Yeah, it's a great question. It's a great question. There's a few. I mean, I think kind of when you up a person's rent, people are very transparent with everyone else in the house what their rent is. So a lot of it is just managing expectations, communicating. But we haven't really had any sort of major operational
That makes
issues
sense.
yet.
I didn't think of the rent increases.
Yeah.
Right? When you think of a tenant in a building, they usually don't have close communication with everyone else that might have a lower rent or a higher rent.
It's tricky. I mean, I'll say one of the things that we came up against last winter were tenants aren't responsible for their utilities, right? Like we eat all of the costs. So when we had that sort of energy crisis in January and February, and it was also freezing cold, people were sort of, blasting heat and blasting AC in the summer with sort of less remorse for what the consequences are, because ultimately we're the ones that sort of pay the bill. So I think that's been a major operational issue, and trying to come up with, a responsible way to sort of keep utilities low, and people aren't always incentivized because they're not the ones that are paying the bill. at the end of the
Typical,
day.
right? When you're not paying for it, you take advantage.
Yeah.
What about, obviously we touched on management before, I'm touching on it now. What about like noise, right? Like these are small buildings. We hear about it all the time with owners.
Yep.
These are 4 and 8 unit buildings. Obviously, like you have a lot of people in each apartment. Do they hear the apartment above them, like walking around at night or partying? Like that's what I heard. Like when we talk about co-living, I think about like young people. I think about some partying, some loud
Playing
noise,
music,
playing
someone else
music,
wants to go to sleep.
staying up late at night.
Yep.
Are you getting a lot of that?
That's typically an issue that I think the roommates can sort of resolve
Okay.
among themselves. We try not to get too involved in and that. I mean, I think just over communicating, right?
Yeah.
Like saying that like you can't be playing loud music after 10, 11. That's really all you can do as a landlord. But, you know, as I said, average age is like 28. So that people are at the age where they can kind of work these things out on themselves and haven't had any like major crises to date, which has been good.
That's amazing.
Yeah.
Yeah, because that's one thing we hear a lot. I mean, New York management is very tough in New York,
Yeah.
and that's a lot of people like outside your business, but a lot of the investors we deal with. Those are the two things that hurt the most is renovation in New York,
Yep.
which seems like you guys are doing a lot of it and you're conquering, and that's great. And management, it's a very
I wouldn't say that we're conquering it, but
Yeah.
we're doing a lot of it. Yeah.
But you're doing it at a high level. I
Yeah.
mean, a full gut of a building is not, especially alt ones.
Yep.
That is not a walk in the park, and
Yep.
those are real jobs. And
Yep.
to do that, it's a scary thing. We've heard a lot of horror stories, so that's good that you guys know the business. You must. If you're doing what you're doing, you must know the business well.
Yep.
Yeah, it's really
Yeah.
good. Anything else that we should cover that we haven't touched on, or any questions for us?
I mean, I guess I am curious sort of what your perspective on the industry is to kind of
Co-living?
flip it on you, right?
Yeah.
Like you guys have been brokers for 10, 12 years
Yeah.
now in New York. You know, have you dealt with co-living properties before, trades? Where do you kind of see the cap rate expansion for a deal versus sort of a conventional property?
Tough question. It's
Yeah.
a good question. Okay, I'll take a stab at it.
Yeah.
All right, go.
We saw some master lease deals back in the day.
Yep.
None of that materialized. I feel like there was a big spread between what investors were willing to pay versus what the owner wanted for the property.
Yep.
I think where you guys are owning the properties, it's definitely interesting. In terms of cap rate expansion, it's honestly would be a guess. I mean, I haven't seen a co-living type of sale. I mean, we saw the one-offs back in like 2015.
And we've seen people position buildings to sell. I mean, I know you bought a deal where someone did the work and sold it to you, right?
St. Mark's.
On St.
Yep,
Mark's.
yep, yep.
So I have heard investors like team up or like have some, they know what the person wants and they'll build a spec property and sell it to them. I've seen that.
I think on a one-off deal, the cap rate's got to be much higher than it would be
But-
for a standard rental
Well,
building. But
go ahead.
when you can put a portfolio together, then you're going to start to see the yield start to compress
Yeah.
based on the scale.
There's two things in my mind. So the hardest thing I think is for like an individual or private investor is just the financing component. Getting a traditional loan to lend on a relatively new asset type.
Yep.
I think the biggest advantage you guys have is that you've cut out the middleman. Where why would I buy a co-living building that has a master lease where I still, or at that point there is a third party involved that's essentially getting a piece of the action.
Yeah.
Where you guys are all in house, right? You're not paying a landlord $3,000 a month, collecting the extra $1,800. You're getting the $4,800, whatever the math may be. So I think it's definitely a niche that you guys have filled where you're no longer dealing with like a broker to rent a room or, you know, some creepy ad on Craigslist. You're bringing everything under one roof, and I think that's what's appealing to it. So I definitely think there's a lot of value to that. And I think like what Luke said before, scale. There's
Yeah.
always going to be money looking
Yeah.
for return. It doesn't matter what it is. So as long as there's the proof of concept and the money's there shouldn't be an issue exiting.
Yeah.
Yeah, and I also
Full
like
scale,
yeah,
yeah.
I like the fact that you guys own the buildings. I think that's huge. I think that you're building a brand, and we're seeing investors do that. When I say that, I mean, you know, I don't know if you're naming the buildings, right? But you want someone to know that's a Cohabs building, right? Those are Cohab renovations.
Are you guys branding these?
Are you
as-
naming them?
They're named, but I think what you're speaking to on like the branding side is yes, there is like a uniform branding
Yeah.
that we do, right? Like we try to make all the buildings unique, but sort of within a parameter of like a design set.
We're seeing like buyers do that now. Like there's a buyer that we do a lot of businesses that we actually have coming in this week. They're very good about distinguishing themselves, right? Where they buy a building, it's top end renovations. I'm sure they have their own designers. They name the building and they have this persona that people want to move into their buildings.
Yep.
So I think if you own the building in your business, design it the way you want to do it, you have the Cohabs brand behind it, and you have it at scale, I think there's going to be an investor that's going to take you out of the deal. That's what I think.
I also just think, life's expensive.
Yeah.
And everyone wants to talk about, say, like WeWork, right? Like that concept of...
Similar concept.
Similar, but here's
They
the
didn't own
difference. WeWork doesn't own, or they might own some of the office buildings, but you're also dealing with a lot of startups or businesses that are young and don't have money.
Yep.
We all know running a business is extremely hard on both ends. You're expanding, growing one. We run the brokerage here. It's very easy for those startups to fail. Whereas living, people need a house. And if you can't afford a one bedroom, this gives you that option.
Yeah.
And if it's done professionally, which it sounds like it is, people are going to want to live there.
Yeah.
So I think it's filling a void that people needed.
Is that why WeWork failed, though? I mean, you make a lot of good points. I mean, they didn't own. I feel like they failed because the market, there was a downturn in office, and then they couldn't pay the landlord's lease, and then they kind of went in a little bit.
Yeah.
But if they own, obviously they can't buy office buildings on Fifth Avenue and Madison Avenue, right? It's expensive.
Yeah.
But if they've owned those office buildings, maybe it would have turned out differently.
I think that WeWork failed was because it's sort of like the co-living world where you can sort of generate a lot of revenue, right? So they saw that as a way, well, we can afford to pay a lot for rent, and they needed to scale. And they basically just overpaid for all of their leases. And when I worked for Quarters, and I guess I can speak about them now because they no longer existed, landlords loved when we master leased because we paid like 10 caps to all these landlords.
For sure.
And they had no responsibility.
Yeah, and we were just paying these huge numbers, and we were just growing at all costs. And it's not to detract from the founders or any of like the management because it was just so young at the time, and they were entrepreneurial, smart, driven guys, and they just needed to grow and get scale. And they saw all this revenue that they could get, and they thought, well, we can just pay so much more. And if we have a lot of properties, we can have a very thin margin. And we're sort of on the side of growing a bit slower, kind of understanding the space a bit more, and really sort of understanding like the economics of it, like before we go sort of 0 to 100, I guess.
And there's there's an asset, right? I mean, you own.
It's collateralized by an asset.
Yeah, you own something. You own a building in New York. Let's just, obviously you're in other cities, but you own a building in New York, and that's in the valuation. And if you just own a lease, like WeWork just owned a bunch of leases, or they signed leases, or the other property or business that you're talking about, the companies, they just leased master lease. Is that an asset? I mean, I don't really look at it as one. I mean, that can blow up any day. The owner can turn. You could have one of the best properties in Brooklyn that's generating a lot of income. That owner can turn around and say, "I'm not leasing it to you anymore," or "I'm selling the building," and then you're out. I mean, I just think that it makes sense to own.
You know what's interesting is some of those properties that we sold, like the building in Bushwick that was 7 beds, 7 baths.
Yep.
It's practically co-living. It just wasn't being run by like an institutionalized branded company. But hang on, that sold at like basically a 5 cap as a renovated free market property. So just as we talk through this, I wonder if the yield on the sale of these is actually a lot more compressed than kind of what I started out thinking situationally.
Go ahead.
I would just add something really, really quick. Like when you look at like a 4 or 5 bed in the East Village, people are only staying there for a year or 2, right? But with us, it's like the average lease term is like over a year and a half.
It's great.
So it's not that different in terms of like. This is more of a hotel, so you gotta increase the cap rate. It's sort of the same lease term as just a 20s neighborhood in New York. Sorry, go ahead.
No, it makes sense. But just to go back to what you were saying, that buyer, I mean, that's a unique buyer.
It's a fund. Institutional, but
they've also,
that's who they would ultimately be selling to
They've
anyway.
also turned down deals that had co-living leases.
They won't buy. No, that's a requirement for them. They will not buy a deal with co-living in place. But they, in some sense, a lot of these buildings they're buying,
those were master leases on units.
That's what I'm saying.
Yeah.
They won't.
But they're getting into that business. I mean, the fund that we're discussing. I mean, we'll definitely talk about it more, off the record. But
I know who you're talking about.
Yeah, exactly what I'm talking about. But are they getting into the co-living business right now? They are buying these types of units. They don't like to, but they'll do it. Like
I don't think they mind. It's, as long as they have the income and the yield is there, and
there's way more management.
They have the infrastructure there to manage the properties. I don't think they care.
See, I think that's where they're making a mistake, though. Like obviously James's company has the backing to manage a co-living building. If you're getting into that business without having that foundation, maybe it's a
I
problem.
don't agree. I think they have so many units in such
Yeah.
a small proximity that real estate management is real estate management.
It is and it isn't. I mean, you're dealing with other things. Like, he's dealing with appliances and furniture. I mean, that's a different business.
Got it.
You
Makes
mentioned
sense,
you
yeah.
mentioned
It's
it
a
before though.
different
You like to
business.
buy in clusters. Is that true? Like
Yeah,
if you can
yeah,
get
yeah.
them in a same little pocket, is that ideal?
It's a way to distribute your payroll.
Yeah.
It's a way to distribute the resources that you have and sort of operate as efficiently as possible. Like, we've got a bit of a cluster in Sty Heights now.
Yeah.
We've got maybe 4 or 5 properties all within 3 blocks of each other. And it's sort of a way to sort of broaden the community element as well. So
Are you guys trying to? You said like this brand and events. You try like I know I watched the WeWork documentary. I thought it was pretty cool. Like how they, a brand, right? Like you're gonna have like a Cohabs like concert, like or some Cohabs like event in Bed-Stuy where you advertise your building. So it's more of not just a place to live, but it's like a brand and other things.
yeah, I think we're trying to sort of incorporate like community elements into the property as well. And when you own the building, you have a lot more flexibility with what you can do with the space as well.
Yeah, no, for sure. Like a Cohabs like holiday party where everyone in their buildings go.
Yeah, it's really cool.
Yeah.
It's what WeWork did.
Yeah.
I mean, they made it almost like you wanted to be a member of this organization.
And that's exactly what it is. It's like we want you to be a member of Cohabs in general, and you can break your lease in New York to go to Paris, and break your lease in Paris to go to Chicago, and
That's
that's sort
cool.
of
I like that.
effectively, it's like the global pass. You want to live
That's
somewhere
why,
for half a year, then you can live there.
Especially like if you're in Brooklyn, right, and you can live in a couple of different neighborhoods.
See,
Yeah.
that's really interesting.
Yeah.
Because that's what these people probably want. They probably want to, like, oh, I'm in New York half the year, then I'm going to Paris, and they can do it all throughout your brand.
Yeah, and we've
Interesting,
We've
yeah.
had plenty of tenants in New York who have come from Brussels or from Paris, or they've come from Harlem to Brooklyn, and it's just a very easy, seamless way to live.
How has your experience been? You know, I think you guys started in Brussels. Is that right?
Yep, that's right.
How is it in Europe compared to the U.S.?
It's very different.
Yeah,
it's
is it?
very different. It's people aren't as interested in it because it's been around for so long that it's just sort of an accepted way of living. There's many more companies that do what we do. In Europe, it's certainly less regulation. Like in Brussels, for example, you'll have one building that has one kitchen and a living space, and 24 people
Yeah, so
will
there's only-
all share the space. In New York, that's
Damn.
never happening.
Yeah.
Yeah. But so it's a different style too. It's much more of sort of communal. It's very different. It's unique, and I think we get a lot of our DNA in New York from that like style of co-living. Yeah.
So Cohabs is not responsible yet of any relationships? Like, how many weddings have you guys, or how many relationships have you guys cultivated?
Yeah.
There's got to be some, like,
Of
better
course,
stories.
yeah,
right?
of
Like,
course.
How many wives and husbands met?
We met at the Cohabs.
The Cohabs.
I will say there was a wedding in a Cohabs last year. So
in the Cohabs.
Yeah.
They got
In New
married.
York?
in New
See,
York.
that's what we're talking
yeah,
about.
yeah,
Okay.
yeah,
Talk about
yeah,
saving
yeah.
costs.
yeah.
The other benefits.
Yeah.
Yeah.
I mean, you gotta imagine. I mean, close quarters you're living. I mean, there's gonna be a lot of relationships.
Yep.
Yeah. That's gotta be.
For
Probably
better or
some
for
that don't
worse.
end as happy.
Yeah,
as
yeah.
marriage.
There's gotta be some breakups as well.
Yeah.
I had a couple of questions that came up as we were talking. So
Just
it's like,
like,
yeah, and we can wrap up soon.
Yeah.
Just like, I really liked what the product you guys are putting together,
Yeah.
and I'm just like wondering, is there like a wait list? Is there like a lot of demand, or are you dealing with like vacancy loss factors and bedrooms sitting on the market?
Yeah, I mean, so we are 100% leased at the moment. We've got 4 properties that are open and operational in New York.
Yeah.
So we've got 10 more that we'll deliver in the next year. So it's more just trying to put more product on the market and then really sort of see what the demand is. But globally, we don't have any vacancies.
Wow,
That's
So,
crazy.
that's
yeah.
crazy.
So maybe
many
that means
units
we
is
need
it?
to
1,200 beds?
increase the rent a bit more. But
Or you gotta start really buying.
yeah, so
That's crazy.
Yeah, seriously.
there's 800 beds that are open globally. We own about
800,
12
okay.
to
Yeah.
1,300 and 100% leased at the moment. So
Wow.
yeah,
Well,
Very cool.
It seems like the markets. I mean, there's an affordability issue in the world, right? I
Yep.
mean,
it's not just New York.
I can't speak with much knowledge, but like you always hear about, in Europe, people can't afford to buy a home. It's no different than what's becoming in America. So it makes sense to have less vacancy.
There were developers who were doing build to suit for like the co-living product and then went bankrupt, and that's sort of a different element because now you have a sort of a highly specified product and you need to go and find another operator. So various things happened. All the buildings are fine now. One's for sale in Williamsburg, and it'll be interesting to sort of see what happens with that.
One of you, who's
This is
Quarters.
the Quarters, one of the Quarters master lease buildings.
it's for sale in Williamsburg.
Yeah,
Why isn't
for
something-
$65 million if you want to buy
Oh,
it.
on North 6?
Yeah.
That's really
That was a Quarters building.
interesting.
Yeah,
So
and now
I mean,
it's,
that's as good a location as you can get. Is that
that's
something
Main and Main. Yeah,
I
it's
mean,
Main and Main.
I'm assuming you're looking at it.
Yeah,
Can't go
we're looking at it.
we'll take a look.
I think like the cost of capital for us probably isn't there.
yeah,
If I had to imagine that sort of trades as a multifamily deal.
I agree. It's a big check.
Yeah.
To put. Yeah, I mean, interesting.
Yeah.
I can't believe. So he read. I know that. I mean, I don't know him that well, but he's a seasoned guy.
Yeah.
The guy who's selling that. So for him to do that, I'm surprised because he could have rented that.
To have gone to
anyone.
Quarters.
Yeah, I wouldn't. For the level that he's at, I mean, he owns a lot of buildings throughout New York City.
Yep.
And for him to just, he paid a lot for that.
Well, I mean,
Yeah.
people wanted to get the higher return.
I know. But
It was a
And
master lease. So.
And they're comfortable with the risk profile.
So they're selling that building with the master lease in place. No,
No,
they're not.
no,
Oh,
no.
I'm sorry,
So
they went
now
bankrupt.
there's a management agreement in place
Okay.
with one of our competitors.
So
Interesting.
it's still a co-living.
Yep.
Got it.
Still run as co-living.
Got it.
So it just will be interesting to see if the market prices it as a co-living deal and uses the higher rents, but maybe the higher cap rate, or the lower rents and like a regular multi-cap rate.
Because it kind of goes
For
against
sure.
what we were talking about earlier, how you these locations, because that's as prime as you can
Yeah.
get for a Williamsburg location.
But a room is like $2,400.
Gotcha.
Yeah. So it's very expensive,
Yeah.
but it is the best location,
Can't beat it.
arguably, in all of Williamsburg.
I mean,
How
what,
is-
what would you say a studio goes for in that area?
Well, how renovated? I mean, it's
Decently
what-
renovated. Just
a studio. So let's do one bedroom. A one bedroom in an amenitized building in Williamsburg, I mean, you can get, $5,500.
Yeah.
A 2-bedroom, like the Kent buildings on the water, like those, but you can get as 2-bedroom. And this is a cookie cutter new
Yeah,
construction
yeah.
building, $7,500. But you could also
Like a walk-up. though.
a walk up,
Like a frame building.
a frame building, 1-bedroom in good Williamsburg. If it's renovated, right, it's
Yeah.
$4,000 to $4,500.
Yeah.
Maybe more.
Maybe more, but that's not an amenitized
So this is
building.
going
That's
right-
a walk up. It's no doorman. I'm talking about just
so they're going for like
Everyone's
half of what they would go for.
studio.
Well,
I mean,
it's
there's
going
not a ton of
A
studios,
room.
but
The room.
Yeah,
no,
yeah.
what I'm saying is the room is going for half the 1-bedroom.
How's the actual co-living product like in terms of like the units, the rooms, the amenities, like the overall experience at the Quarters building or the?
It's
former-
good. It's
Yeah,
good. It's
okay.
really good. Huge basement. There's
Yeah.
a rooftop. I mean,
Nice.
it is comparable with a Class A property
has to be.
Yeah.
in Williamsburg. Yeah. And they're all 4-bedroom layouts. And I mean, this is all public knowledge.
Yeah.
And the rent is like $2,100 to $2,400 per bed.
It would be a good case study based on this conversation to
Definitely.
see
Yeah.
what happens here.
Yeah, absolutely.
All right.
All right, cool. Anything else?
I think that's it, guys.
All right,
Thanks so
James
much.
Grasso, Cohabs.
Thanks for having me on,
Thank
guys.
you very much.
Yeah.
Pleasure.
Appreciate it.